Thank you so much for accepting to take this few questions with this event today. The biggest worry, as you just listed a few items, current account deficit and the whole effort that you have been making to get more foreign inflows as short-term measures. When do you expect to see results on the ground?
Last year, we were completely successful in fully financing the current account deficit. Now, this year, estimates are that the current account deficit will be of the same order. And I'm going to do my best to ensure that we fully finance it without drawing down reserves.
Is RBI doing enough to support growth, at the same time manage rupee well?
See, the world over, central bank and government have not always been on the same page. But that's a fact. You can check with any country of the world. And in fact, this antagonism between central bank and government is perhaps a very functional antagonism, maybe a healthy antagonism. I'm not saying that is unhealthy. It's perhaps healthy. The central bank's mandate is price stability. Government's mandate is much larger. Topping government's mandate is growth, employment. Price stability is, of course, very high in the government's agenda, but growth and employment are equally high. So often, government's position and the central bank's position comes into conflict. It's not only in India, it's in most countries of the world. I have tried to argue that while I acknowledge that the central bank's mandate is price stability, that price stability must be seen as part of a larger mandate of growth and employment. For example, only yesterday President Obama has made a statement that the next Fed chairman must be someone who has two objectives in mind. One is price stability, and the second is maximum employment. So all over the world, thinking is changing. The mandate of the central bank cannot only be price stability. The mandate of a central bank must be seen as part of a larger mandate, which includes price stability, growth, and maximizing employment.
Whatever steps have been taken on the rupee front, do you think they are adequate, or we need to do more, as in we are talking about possibility of sovereign bonds and all that, so is something in offing?
After I took over on 1st of August, and we took a number of measures, between August 2012 and May 2013, the rupee did not depreciate at all. It remained between 54 and 55. It was remarkably stable. And while we were patting ourselves on the back, came Mr. Bernanke's statement. Subsequently, American leaders have told me that the statement was not intended to trigger a collapse in currencies, but that was the effect of that statement. The currency of Brazil, Chile, Turkey, South Africa, India, all were affected because of that one statement. The rupee depreciated. I understand, yes, if America withdraws from quantitative easing, there will be some rush of dollars out of emerging economies back to America. I accept that. That will cause some depreciation in our rupee. If the rupee had, say, declined to about 57 or 58, we would have accepted that as a price we pay for our current account deficit and for our inflation. But when the rupee depreciated beyond 58 to 59 to 60 to 61 and was threatening to go to 62, obviously the government and the central bank had to take some measures. The rupee depreciated because of speculative attacks by certain people. People were making one-way bets on the rupee. They were borrowing cheap in the overnight market, taking positions in Singapore and Hong Kong markets, and squaring it up in the evening. And obviously, we cannot allow this to go without taking stern measures. So the Reserve Bank has taken some measures on the, not on the policy rate, but on the liquidity side by tightening the MSF and by making the CRR requirements a little tougher. I think it has had a good effect. Last Friday, the rupee closed, I think, at 59.04. I don't know what it is today. But I think the steps that RBI took in consultation with the government of India were the right steps. And then tomorrow, the governor will make his quarterly review policy statement. So let us wait for the governor's statement, which will throw more clarity on the subject.
So there is one apprehension that industry is expressing, that is because of the tightening of liquidity, it will harden the rate and there will be not money left for the investments for Indian investors.
No, let me assure industry. As I said last week, I do not expect these liquidity measures to result in an increase in the bank lending rates. In fact, bank rates have been stable, and all chairpersons of banks have told me that they have no plans to increase the bank lending rate. So the current interest rates will remain. I can't say whether they will come down, but I'm almost certain they will not go up. That is point number one. Point number two, I've spoken to a number of banks, and they've all assured me that the credit needs of industry will be met. In fact, there is enough money to meet the credit needs. There is no difficulty in meeting the credit needs. My worry is, while there is credit demand pickup in the agriculture sector because of the good monsoon and the larger sown area, there is credit demand pickup in the SME sector, there is credit demand pickup in the commercial real estate sector, and there is credit demand pickup in the retail sector. Banks are not getting big ticket demands. Industry here must come to banks and make big demand for credit. I want you to talk about big industries where you must come and demand credit of 300 crore and 400 crore and 500 crore. That's not coming, but if it comes, banks have assured me that enough credit will be provided.
The problem with the Indian CEO is that he has a capex plan but doesn't want to invest at this point in time. And generally the sense is that now let's wait for the election and we will wait for the new government. Do you also get that sense?
What has elections got to do with
but they are
investment?
They are not rolling out their capex plans.
And what makes you think that the next government will be more friendly to you? Therefore, I think elections have nothing to do. I mean, economic cycles don't respect elections, and economic investments don't have to wait for elections. And why is Indian industry gloomy? If industry is not confident of investing in India, where will you invest? I agree we are at fault. We did not clear projects quickly. A large number of bottlenecks came up. But since the last year, I have candidly said we must get over these bottlenecks, which is why we set up the Cabinet Committee on Investment. We've got a project monitoring group 24/7 dedicated to those projects. The PMG has already cleared 63,000 crore worth of projects have been cleared of all blocks. The Cabinet Committee on Investment has cleared 1.6 lakh crore worth of projects. We are attending to it on a daily basis, on a weekly basis, to get these stalled projects off the ground. I've held meetings in Mumbai, Chennai, Bangalore, Hyderabad, Delhi, Kolkata, sat with industry, each one of them, and asked them which is the project that is stalled to get it going. Ignore me, ignore the government. Industry's business, industry's dharma is to invest and make the country grow, irrespective of who's in government and who's not in government.
Sir, one minor digression, because you said ki what makes them believe that next government will be friendly. What do you mean, UPA 3 is not coming?
No, no, you are quoting me wrongly. I said, why do you assume that? Why do you assume that the next government will be more friendly, implying or less friendly? There's no reason to assume that a government will be more friendly or less friendly. Our government is friendly, and when we return next year, we will be more friendly.
Sir, you spoke about the immediate need on current account deficit front. The Indian industry at this point in time, because you have really contained fiscal deficit target well, all your key numbers are really looking much, much better in last 1 year. Is there a case to give some more concession and incentive, because still there are strong headwinds in the economy? So can something be more done for the industry, especially for the new entrepreneurs?
I mean, within the limits of the fiscal space available to me, I have given incentives. For example, there is a special investment allowance of 15% if you invest this year and next year. So that has been given. It's a huge incentive. I can't now tell you what fiscal space is available for more incentives. But as we go along, depending upon how the economy performs, how my revenue collections are, how certain industries do well or not do well, we can look at that. But I can't make a general statement that we will give more incentives without knowing what is the fiscal space available to me.
One marquee project that you had was direct benefit transfer.
Yes.
Is that showing some significant saving, and are you getting some space to kind of maneuver?
Oh, it is. It is. Since last week, DBT mission has been brought under the Ministry of Finance so that we can monitor it more closely. Take LPG alone. We have 14 crore registered consumers of LPG. Now we believe that only 12 crore are genuine. We believe that the rest are duplicate or false addresses, false names, etc., whatever. Now I'm not even taking 2 crore. Let's take 1 crore non-genuine accounts. On each cylinder, the subsidy is 500 rupees. So if 1 crore cylinders can be eliminated as duplicate or non-genuine, I save 500 crores per month. And for 9 cylinders, I will save 4,500 crore. So I think there are huge benefits, efficiency gains, economic gains, lessening of corruption, lessening of diversion by transferring monetary or monetizable subsidies through the DBT. I think the DBT's impact will be felt in about 6 months when the bulk of the LPG consumers come under DBT. Today, DBT impact is felt, but by a very small number. The pre-metric scholarship, the post-metric scholarship, the scheduled caste, scheduled tribe scholarship, the Rajiv Gandhi National Fellowship. These are small numbers compared to 1.3 billion. They feel the impact of DBT, they are very happy, they are completely satisfied. Complaints from them is almost zero. But the impact is not there because the numbers are small. It's only when LPG is rolled out, which is a big ticket item, you will feel the impact. And then when Manrega is brought under DBT, you will find the impact is even greater. And if we can bring fertilizer subsidy under DBT, which is very complex, very difficult, but if you can bring fertilizer subsidy under DBT, you will find that the impact is completely nationwide and enormous. I think we'll have to allow DBT to gather pace. We can only go as fast as the system can take it, but I'm confident when the bulk of the LPG consumers go under DBT, the impact will be felt.
I think gold, you have been really working hard and in a very determined manner. In Gujarat, we must talk about gems and jewelry. some industry leaders are here and they want to ask you a question.
Would a zero import of gold help the country change our rupee value and improve our current account deficit? And sir, if that is so, would you bring a favorable and an industry-friendly gold policy for an industry that is willing to help the government so that the 2,000-year-old craft can still survive?
Let me begin by saying I have great sympathy for the gold, gem and jewelry industry and to the millions of craftsmen who are engaged in that industry. If we can achieve that utopian goal of zero import of gold, I'll be the happiest man in this country. See, unfortunately, the people of India think they are buying gold which is available in India. Not 1 ounce of gold is produced in India. Every ounce of gold comes from abroad. Secondly, people of India think that they are paying in rupees for the gold. Not true. It is paid for entirely in foreign currency. Which is why I had to take this painful task of educating the people. I can't ask you to stop buying gold. I'll probably be lynched when I leave this hall if I say that. I can't ask you to stop buying gold, but can I appeal to the people of India to moderate their demand for gold? If you're buying 2 sovereigns, can you buy 1 sovereign? If you're buying 20 grams, can you buy 10 grams? And I'll tell you why. Look at the numbers. Last year, I think net import of gold was about 845 tons. And we paid $50 billion for gold. $50 billion. You know what $50 billion translates? $50 billion is 5,000 crore dollars. 5,000 crore dollars multiplied by 60 rupees to a dollar for the sake of easy multiplication.
3 lakhs.
It is 3 lakh crore rupees that we are paying for gold. Imagine 3 lakh crore rupees. I welcome your offer to work with the government. We have a gold deposit scheme. We have gold ETFs. We are trying to popularize them. But people in this country are so attached to gold, so passionately attached to gold, that I think we can reduce this passion only in slow degrees. But if industry is willing to work with government, I'm very happy to work with you. I think you have already met the Revenue Secretary and the Chairman of the Boards of Taxes. I think you have asked to meet me. I will find time to meet with industry. And if you have any suggestions, I'll be very happy to work with industry to moderate the import of gold.
Wow. Good.
What is growth? Growth means if last year you produced 100 tons of steel, and this year if you produce 110 tons of steel, the steel sector is growing by 10%. If last year you produced 100 tons of coal, and this year you produce 120 tons of coal, the coal sector is growing by 20%. Growth is a function of production. We have to produce more. More steel, more coal, more railway lines, more roads, and in the social sector, more hospital beds. Agriculture, more food, more pulses, more edible oil seeds, more fruit, more vegetables. But unfortunately, we do everything to stop production. How can anyone put a factory without land? And if everybody in this country says, we want power, but you can't put an atomic power plant, you can't because it is dangerous, you can't put a thermal power plant because it will pollute the atmosphere, You can't put a hydel power plant because it's environmentally unacceptable. Then where will you get power? Everywhere in the country, I see people saying what the Americans call the NIMBY, not in my backyard. Put up a thermal power plant, but put it in his place, not in my place. Put up a hydro power plant, but not in my state, in some other state. How is that possible? Yes, we have to respect the ecology and the environment. We have to preserve our environment. But sometimes land has to be taken away from a degraded forest in order to put up a power plant or to mine coal, and we have to do compensatory afforestation.
Sir, allow me to take one more headline from you, sir, about sovereign bond and NRI bond. Many people are asking about this. Are you bringing? If yes, when?
See, obviously, this question cannot be answered with a yes or a no. These are not announcements that are made even in an impressive, glittering ceremony like this. As I said, and as the Chief Economic Advisor said, all options are on the table. And whether an option should be exercised or not will depend upon the economic situation at a given time.
Thank you so much, sir.